Hey traders and traderettes, this is Greg McLeod from the Forex Cash Machine and the Elite Traders University here with the Bulls and Bears, our weekly charts market outlook. And I'm your host, Greg McLeod. I'm the founder and CEO of the Elite Traders University and the creator of the Forex Cash Machine and Tip and Run trading systems. And it's great to be with you here for the start of this week, this first day of March 2020. Man, we're 3 months into the new year, and it's just amazing how fast things are going, and how 2020 has started off with a bang, hitting new highs in the various equity markets at the beginning of the year. And what a difference with the coronavirus scare hitting the markets. We see the Dow plummeting, and we see a lot of the currencies, a lot of flight to safety, where money is flying into safety assets like the yen and the Swiss franc and gold. We're seeing that rallying to new highs. So we're going to talk more about that in just a moment. I just want to make sure that you guys are all set, all ready for Bulls versus Bears. And let's get started. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And a little about myself. I'm the founder and CEO of the Elite Traders University, and I'm a 24-year trading veteran. Where does the time go? And I've traded options, futures, stock, forex, and crypto. I'm one of the foremost authorities of short-term day trading and scalping. And maybe you've seen some of my videos and things on the social media, where I get into trades in 5 and 10 seconds and 4 and 5 minutes and things like that. Well, there's a method to my madness, and I have a systematic way that I approach the market, and it's a proprietary way, and I developed it over 20 years ago, and while before I became a currency analyst at Forex Capital Markets and Daily FX. And I've also worked at a prop trading desk. I worked at Bank of America. I worked for Pepperstone. I'm a published author. My articles are on Yahoo Finance, Daily FX, FX Street. And again, I'm the creator of the Pip and Run and Forex Cash Machine system. And I'll give you an opportunity if you want to work with me. I have a very special March Madness offer going on. And if you want to find out more about that, then I'll give you a chance to at the end to go ahead and take advantage of how to be mentored for me for a whole year, and we'll show you how to get started. Okay, but so let's go ahead. We're gonna get you a market map, a map that you can actually use to forecast what's going on in the market in the different currency pairs, and we're going to talk about that. In fact, our agenda for today, we're going to be looking at the U.S. dollar index. And the U.S. dollar index is a basket of currencies versus the U.S. dollar, and we're going to be looking at that. We're going to be looking at how the movements of the dollar and forecasting what the dollar will do in the next 4 to 5 days. We're also going to look for its counterpart, the anti-dollar called the euro. The euro is the most traded instrument in the whole world. It is a very, very powerful, and so we're going to be looking at that as well. We're going to be looking at the pound versus U.S. dollar, called cable. That's the UK currency, the Australian dollar, the dollar yen, dollar CAD. We're also going to look at gold, silver, and oil, as well as the S&P 500 and economic news and world news as well. We're going to start off with economic news and world news because that forms our backdrop, okay, so to speak, of where the currencies are going to be moving. Big traders and big institutions look at these high impact economic news events, and you trade, guys. If you trade without looking at this stuff, because you go blah blah blah, all these percentage blah blah blah, I don't understand PPI, CPI, alphabet soup. I don't get it, Greg. I don't care. I just want to trade. I tell you what, ignore it, your peril, stick your head in the sand, and that stuff will come back and whack you in the back of the head. So make sure that I'm gonna make it simple for you. I'm gonna break it down how we can look at it as a way of maybe steering clear of something that could potentially be hazardous to your account. Okay, so we're going to get started. We're going to start with the economic calendar. So get your notepads and pens, or if you're recording or watching it on YouTube, awesome stuff. We're going to get started in just a few. I'm going to go over to my favorite tool for looking at the market. That's called My Market Heat Map. Now, My Market Heat Map is a collection of tools, including my Forex heat map, my market heat map, and also a lot of other things as well. And so let's go ahead and get over to uh, what we got was the arrangement of currency pairs by percentage change. We're going to talk about that a little bit later, but there's some other tools in here. We have heat maps for all the for the equities around the global indices. Because I like when I trade Forex, I like seeing what other markets are doing. Why? Because though to buy stocks, you need money, right? And we trade money. So seeing how money is flowing in and out of the stock markets around the world, whether it's Japan or the Dow Jones or the S&P 500 or any other market, I want to see where that money is going. Follow the money, right? So I like looking at the equities. I like looking at commodities, see where the money is flowing, where it's going toward oil, gas, or gold, silver, or copper. They'll give me an indication of either we're going to be in a risk on or risk off scenario. If we see like gold and silver rallying, it's a sign of fear. If we see maybe oil rallying, it's a sign of maybe global growth or strength, or maybe a rise in copper as well. I also take a look at the Forex majors because the Forex majors, about 7 of those, and I like seeing where those are going because those are like the primary colors in paint. You mix those together and you come up with a whole bunch of other different, all the other currency pairs that we trade as well. We can see that dollar yen is in the top spot, followed by Aussie dollar. They have a rate announcement. We're going to talk about that. Kiwi dollar, pound dollar, and then we can also go larger and see all the Forex, or a great deal of Forex currencies with the Forex heat map, right? We can take a look at the vast array of them. We can see the yen pairs are doing rather well. We can see that our dollar pairs and some of our risk off pairs are trending down as well for now. Then we look at the crypto heat map. We can see what's going on with the cryptocurrencies. Sometimes they are doing well. We got Bitcoin Cash up at 1.67%. We got Ether of 0.87. The crypto major index up 0.85. Bitcoin up 0.73, and so forth. So we can see the cryptos are all moving higher as well. And then we have a heat map that has all the instruments that we're tracking on. So we're like. So by looking at this, I get a complete overview of the market. Now, I tell you what, you can also get access to this really great tool just by go to mymarketheatmap.com, and then you'll be able to get access to this. It's 75% off. Normally it's $199. There's lots of other things as well, including courses and videos and things like that. The tools, the trader tools, we have charts, quotes, economic count is what we're going to actually use right now to look at what's going on in our, as far as the upcoming stuff that's of importance to trade. We can see we have the Caxton Manufacturing PMI. The previous number is 51.1. Consensus is 45.7. Came out at 40.3. A lot worse than expected. It was expected to drop, but it really, really dropped, right? It's probably in the back of the coronavirus. So many people are, our hearts and prayers are with those people who have contracted this mysterious virus. Okay. Now we have some other things coming up. We have some Spanish data as well as some Italian data and some French data too. Coming up later on. We do have some ISM out of the U.S. tomorrow, as well as building permits and the cash rate, the Aussie, there's a rate announcement for Australia tomorrow. They're expected to keep rates unchanged at 0.75%, and so that'll be pretty cool as well. Usually what we're going to look at with these announcements is not the numbers, because I know those numbers are probably like, oh no, numbers great, I don't know what these numbers mean. All we want, think of news as like a rock, and think of the market as like the water. When you throw a rock or a pebble in the water, it creates a ripple. And that ripple causes boats and things to move. I mean, if it's a big enough rock, but it'll create these ripples, right? If it's a boulder, it's going to create a tidal wave, right? So based on how the impact of it, whether it's a high impact or medium or low, determines how much the currencies around those news announcements actually move. Okay, so we have a ISM manufacturing index. It's medium. So if if the forecasters are off in their estimates, then the price of the dollar has to reprice in order to compensate for that. Now, we don't know if that number is high or low. It doesn't really matter. Is that what we know that at this time, around 10 o'clock, there's two times when the news comes out. At 8:30 a.m., the news cycle is 8:30, and then one at 10 a.m. And the ADP comes out at 8:15, but it's issued by a private company, so it comes out at a different time. But government ones come out at for the U.S. at 8:30 and 10. We also have the ones that come out of Europe that come out about 4 a.m. So we just know that around that time, you need to either be out of the market or tighten your stops or something because a train is coming. Okay, so you may be picking up coins on the tracks, right? But if you don't look up or take off your headphones, you're not going to hear that there's an oncoming train behind you. That's when you get off the track, right? And the Forex market's kind of like train tracks, So the light at the end of the tunnel, yeah, the light's a train, right? So we stand on that road gathering money and not knowing that there's a there's a tractor trailer or there's a train coming, you get run over. So then you go, why? I don't know what the Trump tweet, or it wasn't a Trump tweet. It was a scheduled announcement. The train has a scheduled time to leave the station. In fact, you can go to any train station and look, and they give you a schedule. They tell you, hey, it's there, right? So if you're playing on the train tracks at that time, you're gonna get hit. So what I'm saying to you is that it's not important for you to know all these numbers mean or anything. Just know that they are going to come out, and if you are trading the currency, which will be impacted if you're trading the euro, what's euro versus US dollar? If there's a US announcement, it's going to affect your trade, okay, in some way. And so sometimes the moves can be counter trend. So just because the rate decision is good and they don't raise rates and they're very hawkish, well, okay, you might spike Australian dollar, but it may be in a downtrend, right? So it really doesn't matter if it spikes up or not. It may be, but if you're short in a downtrend because it is trending down, any positive news could make it go counter trend for a short amount of time, and then it reverses on you, right? So that's why we want to be aware of the times these are released. Okay, so just going through them, we're just seeing that there's going to be a lot of data coming out March 2nd, which is tomorrow, which is Monday. ISM manufacturing and employment, and we're expected to actually most of the data seems to be it's going to be weaker. Looks like it's going to get softer. We've been relatively insulated from the coronavirus stuff, but now there's being reports that there's like 1,500 cases already in the U.S. that they just were not reported. So we'll just see how that will impact. But just know that we need to be aware of that. Also be aware of Australia, the Australia data that's coming out, Australian the rate announcement. That's going to be at 22:30, so that's what, to subtract 12, about 10:30 at night Eastern time. Okay, and then we have U.S. primary Super Tuesday, and that can impact the markets too, depending on if it's it's Democratic, but if there's a Bernie Sanders landslide, the markets don't really like Bernie Sanders because he's always going Wall Street, Wall Street, Wall Street this, Wall Street that, Wall Street took my cat. So depending on Biden says kind of like, hey, things are gonna be the same if I'm elected. It's not gonna be shark, right? So, so the markets might be a little bit more favorable about Biden than Bernie Sanders, and it really, again, that doesn't really matter. It just matters that when whoever wins, the dollar is probably going to be on edge, um, and will give could give some violent moves, just like kind of like a Brexit kind of thing. Okay, let's keep on going. We got ADP coming out on Wednesday. Uh, that is the 4th. I keep scrolling down here, and let me just, I'm gonna filter these even more, right? Can I? I'm just gonna go high impact. Right, there we go. That way we can skirt through these things a little bit faster. There's some medium ones too, and but the rate decisions are huge. We have the Bank of Canada rate decision coming out March 4th. So, Euro CAD, dollar CAD, all those CAD currencies are going to be, CAD yen are going to be affected by this. Currently, the interest rate is 1.75. We don't know. Maybe they might think that coronavirus may be impacting their economy and they may cut. So, think about that. I know Goldman Sachs is saying that the banks are going to cut, but I don't really believe what Goldman Sachs has to say. So maybe nobody cuts and everything stays good. That could be bullish for the Canadian dollar. Okay. So if they do keep rates unchanged, usually that is, the market's breathing a sigh of relief, because money chases yield. The higher the yield, like 1.75, that means, hey, yen is like negative, a negative interest rate, so I can borrow in Japan and put it in a Canadian bank and earn the difference, right? That's basically, so money is going. Now just think of it as a bank. Where would you put your money? Would you want to put it in a negative interest bank, or would you want to put it into a bank that's going to give you 1.75? Okay. So the Bank of Canada rate decision is coming out. And then we have a press conference following that. So that the Canadian dollar is going to be in play and doing all kinds of crazy somersaults on the 4th. So you maybe want to stay clear of that. I know that our guys, in our group, we have ways of forecasting. We know we're institutional order flow, so we kind of can see maybe a day or so ahead when they are actually taking position. And so if you think that's kind of helpful, you may want to go ahead and to sign up for one of those strategy classes there. Okay. Make sure you can see the scrolling offer. Okay, there we go. Couple of offers there. We have the My Market Heat Map, 75% off, and also you can get a 3 free strategy call with one of my top traders or myself. You probably want to speak to one of my top traders. I'm good too, but this is one of my students who has just really blown the doors off. He doubled his account in 2 months without over leveraging. And he's a tactician. He's really refined the strategy that I teach in my class. And he did it in maybe 4 months. Okay, so if you are struggling in your trading and you need help, you may want to ask him and talk to him. Okay, and and then the next step is to actually be mentored by me and take advantage of our special March Madness program that can get you mentorship with me for a year. And that's going to be for the first 10 people that sign up. Tons of bonuses. But anyway, let's keep going. We got non-farm payroll. This is the biggest announcement that we ever have. I mean, it's the biggest, most important economic event on the calendar. It happens usually the first Friday of every month, and it's the non-farm payroll. I'm like, how many people work on a farm? It's like, really? Do we have to call it non-farm payroll? It's kind of like a given, but they call it non-farm payroll. So they don't count farmers, which, hey, I guess, do they have farm payroll numbers? Hey, they probably do, but nobody really cares. But our food comes from there. We should care. So anyway, I digress. Non-farm payroll comes out at 8:30 Eastern time the first Friday, and what that does is the U.S. employment number. It tells us how many jobs are created for the previous month. So we're looking at non-farm payrolls for February. The February number, the consensus of the forecast calls for a drop from 225,000 for January down to 178,000 jobs created. And so also we're looking for a tick up and maybe on the unemployment rate. I think that's the next page. If we do see a drop in employment, that's usually negative for the currency, and usually the dollar may be falling as a result. And we could probably look at the market and see if they're already taking positions against the dollar ahead of this number. If they are wrong though, and a lot of times they are wrong, I don't know why. It's like, look, you've got the computers, you count everybody. How did you not know that maybe 25,000 people didn't find a job, right? But it is the government. We know. Okay. So anyway, let's see the unemployment rate, maybe trade balance, unemployment rate. We should see. I might look over here. Okay. Yeah. Unemployment rate. They're saying it will remain about may take up to 3.6. Right. Previous number 3.6, forecast to drop to 3.5. Okay, all right. Anyways, historically low, and we'll see how that happens on the 6th. So that's the week for that week. The second kicks off the RBA, non-farm payroll first week. Usually markets are a little jittery the first week of the month, and I usually take just small positions because everybody wants to see what's going on with the employment picture. And then usually the first week determines where the rest of the market is going to do for the rest of the month. Okay, so I think I liken it to a peanut butter. If you've seen my interview with Sean Overton over at One Step Removed, we've got the I said the market's like a peanut butter sandwich, right? And I didn't like the crust. I used to always peel off the crust when I was a kid. I peel off that crust, and then I like that soft middle. So that crust is that first week and that last week, okay? A lot of hedge fund managers don't like having open positions the last week because they get paid a commission. And if they made money during the month, they're not going to give their gains away at the last week of the month. And there's a lot of volatility at the end of the month, a lot of price movements, a lot of zigzaggy stuff, low liquidity, low volumes, end of the month stuff, right? They're starting to square their books up. So I like those 3 weeks in the middle. The first week, and you probably find that if you look at your trading record, you're probably looking at it, I do, my trades suck the first week of the month, and they really suck at the last week of the month, and I probably suck on Fridays and Mondays too. And if you look at Tuesday through Thursday, that's probably where you kick butt. I've done with my students, what we do is we go into analytics. I go, wow, if you just stop trading Monday, you just make a whole bunch of money, right? So anyway, those are kind of the things that you get when you have a mentor. When you try to do it yourself, you kind of like experimenting. It's hard to find a solution in your own head. So having a mentor by your side usually is pretty helpful. Okay, so we've taken a look at the news. We basically Canadian dollar's really good to trade just by looking at the news. The news. This is where the party is, guys. Where these flags are, that's where the party is. Okay, so let's go ahead and dig into our charts, and I'm going to go to TradingView. I can go to TradingView, but I also can go. I want to show you that inside here we have a tool. We go right into charts, and then let's go ahead and look at some stuff as well. Okay. So we can walk through our charts, and I'm going to walk us through. First chart I'm going to walk us through is, I like looking at the euro. All right, Euro's my hero. It's been on a serious tear, even with 0% interest rate. It's really. It has become at 0%. It's like the yen. The yen started off with first of all, zero interest rate, and they ZIRP, zero interest rate policy, where so people were using it as a funding currency. They were borrowing at zero and buying other high yielding currencies, right? And usually during times of economic collapse or upheaval, wars, disasters, terrorist attacks, coronavirus, the yen usually rallies, right? Because people are unwinding. Now we're seeing that the euro, it has gone, it's following the same path as the yen. The yen is now negative. It has a negative interest rate, or NIRP, negative interest rate policy, NIRP. And there's forecasting that we might see some cuts in the European interest rate from 0%. I mean, how low can you go? Well, negative. They can go negative too. Well, it's acting like the yen, where we've getting this huge rally. It's like, well, why would anybody buy the euro at 0%? It's like, why? Why? Because it's acting like the yen. In fact, if we were to kind of like chart the yen together, I'll probably get into that, but we would see that they're tracking each other. Okay, so we are coming into this is a daily chart of the euro, and this thing is like been on a tear. I mean, we hit a low about 107.77, which I projected that target a while ago. Especially when we broke a key level of support, we had this really nice level of support. Looks like price is going to come down to test it, broke right through, and just kept on going. Boom. I'm going to remove the volume because really there's no Forex volume. I mean, central volume, no. Because banks are not going to share information. They're not going to tell you how much it's actually been traded, right? So anyone selling you Forex volume indicators, they really should be arrested anyway. So we got a really nice trend line. We had this really nice trend line here, and we broke above that. We had some support there we broke, the trend line we broke, but we have a descending trend line that we actually broke as well. Okay, so now we're just breaking through levels of support and resistance, right? And this is a very parabolic move. This move has been straight up like this for a while without much of a break, right? Not much of a break. Our last swing high was 1.1237, right? And I mean, this, it may be a little on the tuckered side. We're at the 618 at the 1.10641, right? And so we're coming up on a Fibonacci resistance level. Also, this coincides with a supply zone. If you kind of look at stuff like that, right? So we're coming into a nice little supply zone, and we can see, boom. Okay, we've got this area of supply. We haven't broken a trend line. I have a course on advanced trend lines and supply zone, and basically we have a demand line. Price is riding this line. We could keep going, right? Higher swing highs, higher swing lows. This thing is on a tear. And look, we did dip down, and the top of this is 1.1094. So I'm still bullish on this. I mean, it would take some, it'll probably take non-farm payroll to break this. If that number comes out better than expected for the U.S. economy, more jobs being created than actually forecast, then we could actually see a pullback in the euro, and that pullback is a Fibonacci pullback. We'll probably see I think they marked it that where they may take it back down eventually one day. 1.0951. I don't think they're going to take it there yet, but I think we might have a little bit more to go to the upside. We probably will. Non-farm payroll will probably take us down. We've risen up semi-dust with only one little dip here, and so I'm looking. So I'm short-term bullish and medium-term bearish, but overall I think we get back to 112. I think we get much higher, right? But it does have this little obstacle here that it has to work through. And I think we get our ABC pattern that could take us, take us down, but not yet. I think we still have to ride this trend higher. Now, what we can do is we can take a look at the flip side. I know I took a lot of time on the euro, but I gotta get going, right? Keep it spicy, keep it flowing, Greg. U.S. dollar index. This is a basket of currencies versus the U.S. dollar index. In fact, this is the FXCM U.S. dollar index. and it's a arrangement of the majors versus the U.S. dollar, and we can see that you know it has already done a little bit of a pullback. Now the DXY, which is another one we can take a look at too, another index, has a similar shape, and we're on a pullback here. And we may look at the 30% retracement, 1237. Let me go ahead and pull up the Dixie, because we can't pull it. That's one thing we can't do. We can't pull up the Dixie here. But I have a pro version of TradingView, which is it's cool, very cool. I just wish they had tick charts. You know, they don't have tick charts. You know, and I thought, okay, so you don't have tick charts. And we have so this is our daily chart. And this was our forecast, and we did do what it's supposed to do. Okay. So let's back it up, and you know, see, like we've topped out, double top in the U.S. dollar index, and it looks like we have a little bit more to go, which kind of matches all of the euros, the anti-dollars, the flip side. You just flip it around, and basically it's the same, right? So if we had double top in the dollar, then we have probably double bottom in the euro, and so we may continue to drop. There is a demand zone here at 97.32, right? But you know, usually a double top target, our double top target usually comes in on the US dollar index, will come in about 96.39. So this would be bearish on the dollar. So bulls versus bears. You know, I'm gonna get some graphics. You know, little bear going. You know, I mean, what do you guys think? You know, I got this little setup here. Almost like, I know my daughter walked in. She goes, "Cool, Dad. You're like a streamer. You're like one of those gamers." Like, oh, okay. So I'm almost there, right? Almost there. Okay, so boom, I'm looking for the US dollar index to drop. And that should be bullish for everything against the US dollar, right? So we can go ahead and go into that. Okay, let me keep on schedule here. And here's Johnny. Okay. That's a joker, right? Okay, well, pound versus, let's go to the pound. Pound versus US dollar, go to cable. GBP USD. All right. MOUSE. Okay, I'm going to remove all this stuff I do in mentorship. Remove all drawings, right? All right. So these are daily. Look at this pullback. This is a beautiful setup. Do you see what I see? I know if you are one of my Pippin runners, you're probably saying, yeah, time to back up the truck, right? So we got a swing low down here at about the one spot 1922 that we had back in say September. No, that's September. Yeah, September 2nd, 2019, to our swing high about one spot 3515 on December 13th, 2019, and you know, we connect those two swing points, and what we have is a Fibonacci relationship. We're at bounced off the 50. The 50 back at one spot 2747, and that is a really beautiful bounce. We got sellers that stepped in, buyers stepped in at this level, got a bullish inside day candle. So we have a bullish candle within a bearish candle there. So that's like a harami candlestick pattern, like a shades of gray harami, because it's inside the wick. So we expect prices to break north. You know, this is where traders get kind of screwed around, because they say, well, look, lower swing highs and lower swing lows. It's like, yeah, the trend is your friend, right? Got this downtrend, right? Short this and see what happens. You'll probably get your head handed to you, right? Because buyers stepped in, right? So buyers stepped in. We're waiting for a trend line break to the north side, and we see a break above one spot 2850. You want to write this down. can see a move to like 129.22, and then if we break that, we should be able to come back and hit first target 29.25 or so. Hey, quarter line, nice. We can, if we close above that, we got to move to 31.51, nice. And break above this line, 31.15, 31.53. 53, we see the old high coming into play, right? Because there's guys who are stuck up here who got long. Please, please bring price back up, and I promise never to do this again. Well, you know, we can help them out, but make sure that you know, don't overstay your welcome. 34.88. You know, I don't see it happening very fast. I mean, 1, 2, 3, maybe 3 days or 4 days. It'd be very interesting. But again, we want confirmation. That looks tasty. I'm like looking. I'm licking my chops at this too. All right. Again, I'm not. There's no solicitation for. No. This is purely for educational purposes. So pull out your demo and have at it. Right. Bulls versus Bears. I am bullish the pound. Roar. Roar. Bulls hit their horns up, and Bears hit the paws down. Right. So I am. And I'm bullish about. I mean, if we 27.17, we start breaking down below that area, then 25.73. You know, because you never know. They come out with some type of an outbreak, something situation. You know. I mean, we may get a spike down here as capitulation. You know, that's where I have this red line. The red line is a 61.8% Fibonacci retracement. There's some old support way back here, October 14, 2019. So we might see a drop down to that area. But from there, if we do spike down, I don't think we go much lower than that, right? If everybody jumps on this train here, they may just decide to tank it one more time. So, you know, it might take a couple of tries to pick this bottom, right? They say he who picks bottoms has a stinky finger, right? Don't try it. All right. Next thing, Aussie dollar, AUD USD. This is the one that's coming up because we have tomorrow. We have the rate announcement, and I know my buddy, my trading buddy Michael. I'm going to actually go to Hawaii visit him. He's on vacation from New Zealand into Hawaii. It's like you're already in kind of like a paradise, and you're going to another paradise. Well, when you're you double your trading account, you can go wherever you want, right? You can go anywhere you want. So definitely gonna check it. Meet him in person. Really excited. I'll definitely stream something from Hawaii. We're gonna do a trading session from Hawaii. Hawaii is a great time zone to trade. It is like the best time zone in the world. I mean, London session is like 8 p.m. or something like that. So anyway. Here is the Australian dollar. We're looking at a daily chart, and we've had a nice bit of support, and that bit of support just went away, right? But let's you know, I have to actually go back. This thing has been drifting so bad. Go to a weekly, right? And I know even my last, I skipped the video. I was. 60.34 was what I was looking for, an eventual target, a retest of this low. But we do, like I said, we had some minor lows here at 62.62, and I mean, there's a lot of congestion there. I mean, that little area, and if we took this congestion zone, so second coronavirus death reported in U.S. So yeah, something like those headlines. You gotta keep your news. Get a news app or something, and because this stuff we're in a fluid situation. So we're in this congestion area here, and we're drifting ever so lower. I mean, I'd like to see a tag of this area before we see another move higher. But so you got some type of weird candlestick formation. And now with with bots and computerized trading, you're getting like different patterns that probably weren't in the original Japanese um, dictionary of candlestick patterns, where you have a bearish candle with a bullish candle inside of it. I guess this is like a harami as well. Our low is 64.32, and we're currently at 65.28. So we're about 100 pips above that low, right? If that low breaks, we could see a flash move down very fast, right? Because we really have not tested that low. It's been a long time too, right? That was like 2009, and the market has a memory. When we got down that low, this is a financial crisis, and this is and now we're in a coronavirus crisis. So a crisis. 11 years later, a crisis. Pretty wild, huh? And so we may test that low. There's maybe still a little bit more to go to the downside. Okay. Um, I know we do have if the Reserve Bank of Australia cuts rates, that could send us down fast, right? If they don't cut rates, we might get a bounce, but maybe a sellable bounce. Okay. I don't think maybe we're not out of the clear yet. We're below the 20 period EMA, and we're just been, lows. I mean, if we break, let's look the high of that candle, let's say break 65.44, then we may come back and test the old support here at 67. It's like 300 pips, there's some bounce. I think there's some bounce coming in. Okay. Um, Again, going by the daily, we can drop down to 4 hour. Let's just drill down a little bit. Right. See, it's kind of like it wants to, it wants to take off. Got a hammer. We may come back even just up to the old high, 65.86, before drifting back down. Okay. So again, we might, it really depends on what if the RBA is hawkish, thinking like, hey, we're good, we're not gonna cut rates, we're good. And if they do, that could be good for the currency. If they say, hey, we gotta take precautions here, we're cutting rates ahead of time because we don't know how bad this thing is gonna get. Okay. Well, then we'll probably see those levels taking out. Okay. So what is it? Bulls versus bears. What is Aussie dollar? I'm short-term bullish, probably medium-term bearish. But it's kind of a toss-up. We're in a downtrend. Our rally is a scalper. This is a scalper's rally to me. I can scalp this up, right? But I can quickly flip this around and short this sucker right back down, right? So you gotta be on your toes for this one. Dollar yen. This is my paper trading here sucks. Here, well, I guess I was trying to buy I was trying to buy the bottom on that. Yeah, glad I didn't do that in a real account. And it's very, we had nice little support there. We had a nice little, maybe a retest of this area, looking for a return. It was a Fibonacci area. There were a lot of reasons to get in there. Just didn't have a stop on that, right? 618, nice. So when that thing's, look at how big that candle is. That sucked a lot of people into this abyss, right? So big sucky to the downside. You hear that? Yeah. Okay. And I probably close it at the bottom, right? Where we have support. So based on that, this thing is probably, I'm bullish on this based on that trade. Don't worry, my live account trades are a lot better than this. But here we go. 108. We just blast. This was an area, from November 2019 was support, and then we just rallied up strongly, and then just did not pay attention. These fibs meant nothing, nada, right? So dollar yen, again, the yen usually rallies during times of emergency. Well, coronavirus, circling pandemic, white horse of apocalypse of pale death or something. Yeah, this is bad. Okay, yen, right? This thing, go long yen. Okay, so we've got bull versus bear. We may be overextended. However, there is another area of support, right? Uh, if you have a Dell monitor on your computer, a Dell monitor, and it says Dell at the bottom, it was a joke we had at the brokerage that price can go lower than Dell. You can go right through the bottom where it says Dell, like where my name is Greg McLeod. Price can go past that and go underneath and keep going, right? So just because you have a frame on your monitor doesn't mean that price has to stop there. It can keep going. So likewise, for the dollar yen, we could test 109, 106.49 very quickly. And we covered a lot. I mean, we went from 112 to 107, 500 pips in a matter of, like a week, right? Huge. So I am still bearish on this. We've got this kind of rise here above this trend line, but watch it, folks. We might get a test to 106.49. I would love to short it, right? Might get a little bit of a pop up, and then we'll have an opportunity to short it. It's coming up for air right now, just like those whales, those marine mammals. It's coming up for air. USD CAD is our next one we want to come up with. Oh, look at that bad boy. I mean, you got this, we had this rise up to 34.65, which was one of my targets. We hit that, lickety split, and boy, big candle here, right? Inside day. And then so we're, piercing, like a piercing pattern. So we piercing line, we pierced that, the low of that candle, and we might continue down, maybe down to 32.77, maybe even to 32.09. Dollar CAD too, we're probably positioning because of the rate announcement, and a bullish rate announcement or hawkish rate announcement, meaning that they're going to keep rates unchanged, could take us down to like 32.09, right? So this may be the start of something, 34.63. Yeah, we could, and this is looks like an ABC, typical ABCs. We could probably get down to 29.61. So I'm bearish this. First target is here, 32.03. There's lots of congestion right there. See that little knot of congestion? They marked that out as like a pit stop where they, where we can get some more. There's a stick sandwich here, which is another. I didn't make up that pattern. It's called a stick sandwich. Look it up. Hey, Greg, stick sandwich makes me hungry. It's like, yeah, it makes me hungry too, right? So you got the stick sandwich. You got, it's like, hey, you got a little piece of meat in between there and 2 pieces of green bread. I don't know. Doesn't sound too tasty, but anyway, yeah. Now we break that. There's another little stick sandwich down there at 31.25, and you got. Now what's really cool about these little areas, if you put a fib on there now, they'll see the 50 and 60 was the stick sandwich, right? So how could you know the fib before it even happened? Ancient Chinese secret, huh? No, it's Japanese secret. 786 happens to be this congestion here. Wow. All right. Usually ABCs, according to H.M. Gartley, usually who's really the originator of supply and demand zones, H.M. Gartley, page 222 of his book. Okay. Anyway, okay. So we took the dollar CAD. Let's take a look at gold. XAUUSD. It's XAU's gold versus the US dollar. And we got really close. Spitting distance of 1700. all you gold bulls, congratulations, 1689.53. And I mean, look at that. We had that little pullback, boom, and then bam, in your face. Gold on a tear, right? Still an uptrend. Higher swing highs, higher swing lows. You know, probably a little bit of a relief rally if there's some good news. This is like a coronavirus play as well. You know, think of those end of the world kind of movies. You know, nobody wants paper money. Everybody wants like gold or silver. You know, they want solid, assets. They don't want printed paper. You know, faith and confidence and fiat money like goes out the window. And don't give me the digital stuff too, because I was in the Katrina evacuating from Houston, and when those ATMs went down, your electronic money was worthless. Okay, it was my wife with a bunch of money stuck someplace, which was able to buy gas and buy food, right? Because your piece of plastic is not going to work in an emergency. So it's important to keep some cash on hand. That's why it was called the Forex cash machine. So you can have cash, okay? Not digital or buy gold. So anyway. So, I mean, we got some really, really good news. This thing could go lower. I mean, it's been on a tear, and typical support comes in. This was basing at 1454. You know, I mean, we could tag that, and if we do, I'd be a buyer down there. But right now, I'm kind of short-term bullish because this thing has dropped really hard, and usually after something drops hard, we get a dead cat bounce, and I didn't invent that. So all you people who are petted out there, don't come at me. It is a trading term that even a dead cat will bounce. So this hit the ground so hard, it will probably bounce a little bit, and then we probably get one more drop, right? One more massive drop. It'll lure the bulls into a trap, and then they can take their money, and then been in the market as long as I have is like, look, everything's a trap, right? It's a trap. It's Wall Street. Wall Street's a trap, right? so XAG. This is silver, right? That's his next one, right? And the same thing, But it looks like, wow, it kind of like hit its target before it. So you hit that target right in there, boom, hit that, So I don't know, we might get a recovery, and we never got back to the old high on that. And I was looking for 19 on silver, so we might go there. Maybe since it corrected first, maybe it'd be back up there later. I'm actually constructively bullish on silver. Silver at 1687.29 for a move to 19. We got again a bounce. We look for stuff of a bounce, and this could be one of those trap bounces too, where it bounces again, gets a little lower. There is some more support, Greg, right down here, down at 1589, and right there. So so maybe we rally up a little bit. I mean, maybe not so extreme, Greg. We go above like 1750, and then boom, come back down to 1589. From there, that's probably a fib. 618 was right there. There's none right there. We're between fibs, but yeah, that one wasn't a fib. But a little bit of a rally, then a drop to blow out the low, and then we could probably see a move right back up to these highs, right? So I'm short-term bullish on the silver as well. Oil, let's take a look at oil. And we can use U.S. oil or the WTI. I'm going to use the CFD. And did I stutter, guys? Did I tell you? Did I stutter on this one? I said when you start breaking all these lines, this thing is coming down, and come back and test the low, 42.21. And there is our trap that they, up there where, boom, we rallied down, rallied up to like a fib right in here. We rallied to a 23% retracement, a little bit above 53.45. Came back, blew out the low, and didn't quite get the 42.46, the target. But 40, whoever thought we would see $40 oil again? Well, I did, So we come back down 42.81. Might get one more shot down there. We haven't tested it yet. So maybe Monday, Manic Monday, we get one more drop down here. We get a nice big double bottom, and then we could see a rally in oil, right? So probably one more tap to drag everybody out, suck all the bears in one last time, and then boom, I like to be a buyer at 42.31. So I'm short term. My bias is bearish on oil. I mean, I've been bearish oil for a while, and now I would be setting up longer term for a bounce, right? But right now I am I'm short. Okay, and let's take a look at the S&P 500. And I know this video is getting a little long, and I hear somebody yarning out there. Look at that. Well, yeah, I played the bounce on that, which was pretty cool. And I told people about it too in my chat room. I said, "Hey guys, you better play this bounce." The bounce was so fast. It was like 5 minutes. It's like, Greg, can you find something a little faster earlier? Well, that's why you watch this show, because then I kind of like slow my brain down and we can kind of like plot it out together, right? I said that 50% retracement, bam, and I traded that. Let me show you. No, you're just bragging, Greg. You never did it. And I did. It was fun. Let's see if I can find it for you. All right. I think I emailed it to you. If you guys are, if you look at your email, I put a GIF in there. I actually got a GIF, and but the 50% retracement came down here, and in fact, I was teaching my class about it. It was one of our videos. And it didn't happen yet. I said, we get down to that 50% retracement on the currencies or anything. We get this kind of like big move to the upside, and like going, really, Greg? Like, yeah. It'll bounce. It'll go nuts. It'll go friggin' nuts, right? Oh, here it is. Okay. So, yeah. So this is it. This is the CFD US 500 index. And I just smacked it. The thing would just start rocketing Friday. I mean, it just started moving like, you can see it. It's just, 200 something. Look at that. Like 200 points. I had a limit right there, and I just start cutting. I just start cutting the positions. Just cutting them out, right? Boom, 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 right? Boom, 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 right? Why? Because we bounced off the 50. That was that move right in there. I was in that. All right. A lot of fun. A lot of fun if you're on the right side. It sucks if you're on the wrong side. Right. And I mean, drill down to the 4 hour, got that bounce there. Drill down to 1 hour, right? And then there you go. Right. So I mean, the buying started on Friday, and it's probably gonna continue. So you probably look at we regained that 3,000 handle on the S&P 500. So I'm bullish. Yeah, this is looks pretty good for a rally. We gotta look at the bear market rallies. Could be a trap. You can take off fib from here to here and say maybe 30.68. I mean, we could rally to, we could rally to the old high. I mean, we fell so fast. There's some gaps that have to be filled in. 30.69, not bad. But however, this is our big momentum move. You're going to have these guys taking profit. So maybe this is a profit. Maybe people buying the bottom, but maybe it's more like profit taking off the shorts. Once the profit taking finishes, we might get another shot down, guys. Right? No, this time of the year is not very good for stocks. I mean, I think traditionally February is bad anyway, right? So I think yeah, traditionally February has been pretty bad for stocks over the past so many decades, right? Um, let me see if I can find. Yeah, found it really fast. 63 years, right? 63-year seasonal pattern, right? February is always bad for 63 years, right? Well, guess what? It didn't disappoint, and this only went up to like 2012, right? I don't have updated data. So, I mean, this 8 years. But February is traditionally bad, and it just was really bad, right? Like, really, Greg? Yeah. Well, this is from the Stock Market Almanac, and Mr. Hirsch over there, Jeff Hirsch over at the Stock Market's Almanac. Met him in person, cool guy, and he shared with us this chart. So big shout out to the Stock Market's Almanac. Get a copy of that. Good thing to have on your desk. Okay, so that's, I believe that is it. Yeah. We might want to take I throw a yen pair in there for you guys. Pound yen. I'll pop the dragon in there, right? Because I know a lot of people like trading it because it's fast. Take your money fast. And I mean, same kind of thing here. I'm gonna remove all drawing tools, right? Go to a daily chart. And no, we have been pulled back. No, you got one of these really weird candles where you have this. The opening of the bullish candle is the previous day is higher than the. It's strange, really strange. Okay, and we take a fib on that. We're sitting right at the 50, right? So I mean, it's just like the S&P sitting at the 50, pound yen sitting at the 50. So all these are sitting at these 50% fibos, which is a little stick sandwich over here too, marking. So maybe that's where they're kind of plotting to take this north, right? Let's drop down to a 4-hour. It's drill down, and I'm actually constructively I'm bullish on this. Short term bullish up to 39.80 or so. We're at 38.69 on pound yen. Okay. Well, guys, that's gonna be it for me for my wrap up. I know I'm probably people are like, I'm a dollar Swiss. Well, what about dollar Swiss, right? Very very interesting. Add down to all kinds of daily support down there. Don't know if it will rebound since it's been going. It moves in the opposite direction of the euro, but yeah. But we are wrapping up, and I want to thank you so much for watching this video. Make sure you thumbs up and like it, subscribe, and turn on notifications so you can see when my next video is going to be. And I look forward to helping you in your trading. I look forward to coaching you and mentoring you and helping you to achieve all of your goals of financial freedom or supplementing your income or just getting free. I'm here as a resource, as a help. You can benefit from my 24 years of experience working at one of the world's largest forex brokers in the world. In fact, a couple of large forex brokers. And so I want to put that experience to work for you to help you out. And you have a great day. Happy trading. Wish you luck this week. And make sure you check out my other videos and courses. Remember, we're having a March Madness sale. It's a year of access to me, Greg McLeod, and it's an unbelievable price. You won't want to miss that. I think we're doing something for this. Go ahead and send me an email, Greg at Elite Traders University or EliteTradersU.com, and you can find out about the package deal for that. Okay. You can also go to the free masterclass that's scrolling below, 4 pillars to 6figures.com. And that way you can schedule a time to speak with me or one of my top traders, and we can talk to you about getting enrolled. See if it's right for you. It may not be right for you. It's not right for everybody, But if you are tired of losing, or if you're tired of trying on your own and or need to have some help, well, this is where you do it. Okay, do it now. Click the link, and we'll see you on the other side. Love you guys. Peace and pips. Happy pipping. Cheers. Bye.
If you want to learn more about profiting from the Forex market, go to www.theforexcashmachine.com and sign up for a free training webinar. Get the secrets from Greg as he reveals how to earn limitless income. Learn more to earn more.